Let's focus now on Rogers Communications. That stock has dropped almost 19% this year. It did report first quarter profit and revenue up from a year ago. The company says its mobile and internet customer numbers increased. Let's get perspective from Dan Rohinton, portfolio manager at IA Global Asset Management. It's great to see you.
Good to see you.
You're not that keen on the telco space right now. Do you own any of the big names?
We do, and we also own Rogers as well. But I think it's just important to say, welcome to the new normal, Andy, because it's net sub growth where it is today, ARPU that continues to grind and churn, but still towards a bit of a negative path as the back book gets churned through. This is the new normal that we're going to see for Rogers, for BCE, and for TELUS as the industry competitive intensity reaches a more stable footing, but at the same time as the bolus of immigration demand is moving in the other direction as well.
The bolus, I like that image. It's like a thing of food moving through the digestive system. And obviously we did have that jump in immigrants, and that everybody needs a cell phone.
Exactly. So when you go from 90,000 net sub growth on a postpaid basis last year to 11,000 this year, and 11,000 is a good news story, that just tells you the spectrum change that we're seeing here. Rogers, of course, has been moving to improve its balance sheet. It struck that deal with Blackstone and other funds to give them an interest in its wireless operations. And Desjardins highlighting that they're going to stop selling stock to shareholders under the dividend reinvestment plan at a discount. They're going to stop doing that. Yeah, and when you think about DRIPs, it sounds like that sounds very nice. But all it is equity issuance at a discount on a daily basis. So when a company is issuing you stock every single day and you're reinvesting your dividend back at a discount, that's not necessarily charity on the part of the company. That's the company telling you they need more capital. So when they're cutting the DRIP discount, that's a good news story and tells you that the balance sheet is more on a sounder footing. I have questions long term about the media consolidation play that they're trying to do and things like that. But at the end of the day, this is a better balance sheet than it used to be, the DRIP being cleaned up, and as long as wireless growth stays in a broadly stable footing, at 7 times earnings, that's a decent starting point.
Rogers competes with BCE, our parent company. BCE is down around 8%. The yield on BCE, in theory, now 13%. What is your thought on the BCE dividend?
So you got to take the stock component into that. So about, I believe, a third is DRIP take-up as well. So the stock dividend reinvestment plan. So there will, not all of the yield that BCE is giving is a cash yield. There's actually implicit equity issuance that's going on through that as well. So think of it closer to probably an 8% yield all in with a very high payout ratio because of the Ziply fiber acquisition in the United States that's going to take up capital for the next 2.5 years.
So you do own some telco stocks, Dan, but you're not wildly enthusiastic about the industry.
Yeah, it goes back to in Canada, when you're running Canadian-focused portfolios for Canadian clients, these are the choices you have to make. So do you want to be exposed to the Canadian P&C cycle, or do you want to have
P&C,
personal and commercial banking, the Canadian credit cycle?
Yeah.
Or have a payout ratio that's probably a little too high and at risk of getting cut in the case of BCE. So those are some of the trade-offs you have to make in Canada.
Okay. Boeing, it's been such a sad story. Let's have a look at, I sound like President Trump there. Such a sad story, awful, the saddest ever. Let's have a look at the 10-year chart for Boeing. There's a 1-year chart. Is this a stock that interests you?
No. And I'll tell you there's better options. So I'll tell you the story about Boeing is it's a lot easier to order the planes than it is to deliver them. So their order backlog is at basically the record highs, if I recall correctly, from this quarter. And at the same time, they're finally back to producing the 737 and the 787s at basically not quite the peak rates that they had before, especially before the issues that they got hit with the crash in the pre-COVID period. So ordering planes is easy. The fleet is getting older, and that's a better news story for the aftermarket. But the problem with Boeing is building the planes and sourcing the supply and getting the supply chain in order consistently with the different myriad of hiccups that you do have. So the strike, they're finally working through that. That's why the program margins did come in better and the free cash flow did come in better. So it's not a demand issue for Boeing. It's can they actually deliver the planes in a consistent enough fashion without hiccup? And I'd tell you, easier said than done. But this was about the best quarter that Boeing could have delivered. It's just a question of, are there better structural opportunities out there in aerospace?
Would you be interested in Airbus, for example? They've had their own production holdups.
Same problem. It's easy to order the plane. It's hard to make it.
Yeah.
Airbus has been gaining market share in what's known as the narrow bodies. So the A320 competes against the 737 plane for Boeing. So there has been some market share take up because Airbus has had fewer issues to deal with. But the broader question, once again, is it's better to own other pieces of the ecosystem in my mind.
It's amazing, though. Boeing has a backlog worth $500 billion US on paper.
For sure. And you know what? The airline miles flown does continue to grow secularly. So the backlog extends to the decade. But the production ramp, you really have to get thousands of suppliers of tens of thousands of smaller parts moving in complete unison. And that is a very, very difficult game to play on a structural basis, which is why the backlogs build and the demand to push through that. They can't burn through backlog fast enough, is my point.
No, it's interesting. They want to go to 42 units of the 737 MAX per month. I mean, that's amazing. More than one of those planes every single day when you consider the complexity of the product.
For sure. And it used to be in 2019, they were targeting north of 50.
Wow.
So they're still behind what they would have done 6 years ago.
We're going to take a break after this. Dan very kindly sticking with us, and he'll share some of his top stock ideas. We'll be right back.